BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. A bit of a cold going on here, cold flu, the old virus, whatever it is, I've got something, and I'm drinking lem sips like it's going out of fashion. Right, let's have a look, first of all, with Bitcoin, very briefly. 3-day, the 20 simple moving average. The Bollinger Band Center has been tagged. Outside of that, though, every other aspect of the chart doesn't look particularly happy, I have to say, but that is decent as far as support is concerned. So we came down to like a different type of support. Support. That's all we're hoping for. Just give us some support, all right? The reason I'm so optimistic on Bitcoin, or I suppose optimism is the right word, because effectively the charts don't look very good on any time frame, really. Starting from a 1 hourly, we're trending down with no bullish divergence. Basically, we're just consolidating up now in the form of that pullback. Again, 4 hourly below the 0 point. There is not a bullish divergence yet. We might not even get it on the next move down, which is again slightly concerning. 12 hourly below all major moving averages. No bull div, heading towards the 0 point. Not a good look. And obviously the daily, as we're all aware, now below all major moving averages. And firstly got a rejection today on the 200 exponential moving average, fresh cross on the MACD. But again, the MACD is above the 0 point, so we do have that in our favour, but not good for momentum, I have to say. Does now look a little bit like a classic death cross retest of a 200 simple moving average. So that is that. But I'm just putting it out there because currently doesn't look good. Let's face it, so it's not looking good on its own merit. There is no merit, right? It doesn't look good. We've only got that 3-day, if anything, to hold on to, and a 3-day is not really a time frame that I would ever really look at and consider to be a tradable chart. I mean, it's part of trading, but it's not. It's nothing special, really. It's no daily, it's no 4 hourly, which are usually my bread and butter, to be fair. But we do have something in our favour. But even that, again, Bollinger Band strategy gives us a 65% more likely to remain above that portion of the band. But it's facing down dramatically, which means that, it's going to keep going down, and it points down to the direction that it wants to go in. And it's a 3-day, so it's going to take a while for this to even go horizontal. And in a downtrend, it might not even get horizontal. So we should really be looking at this and going, right, what do we see? Death cross, rejection, continuation, no bull div, nothing. So Bitcoin, unfortunately, looks pretty lame, unfortunately, on all the time frames, to be fair. But the one thing that, and I've been saying this for a little while now, the one thing that's strange about this is that all Bitcoin's best friends, whether it's the Dixie, which is still moving down, obviously the weekly is the second week in a row after last week's big shooting star. We've got S&P shooting back up, flying high. Stocks are loving life. They are loving it. This is S&P futures, 200 simple moving average. It's more apparent when you look at it on this chart where I've got my analysis, and we're moving up towards the resistance at this point now, because we've got a support on the 21 exponential moving average as of yesterday. So it does look like we're probably heading up towards the top of this trend line, which is again just in the context, the broader context of a downtrend. We are in a symmetrical triangle. If you're trading the formation, which appears to be an appropriate thing to do, you would exit at the top of the formation and not expect to break out, even though it's a 50-50. We don't know which way it's going to go, so 50-50, probably ever so slightly more likely to break out than break down, but still, it's quite a clear-cut chart, and the S&P has been very clear-cut for a couple of years now since the downtrend. Very clear-cut, very, 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 very crisp when it comes to formation trading. So we'll respect that trend line for what it is, and think about taking profit on any stock position that we've got, just based around this. And again, even though it's ever so slightly more likely to break out, it's still very crisp charts. We don't want to shoot ourselves in the foot or get too greedy. Gold hammering high, flying high. Bollinger Band Centre at the moment, again, that's an area of resistance. You break that, you probably move straight back up to the Death Cross retest, back up to $1,900. So I'm putting all this across because Bitcoin's best friends, all, you know, we call it the domino effect normally. Forex, stocks, commodities, they're all having a great old time. They're loving life. They are absolutely loving it. And Bitcoin is not loving it at all. I've not looked at this in a long time, but we used to look at this, in the previous bull markets, and just it's anecdotal, really. And what we see is something called blockchain whispers. I don't know how appropriate it is, but we used to look at this and gauge where retail is positioned, and it would appear that retail is generally positioned significantly long, right? Retail, we're all retail, let's face it. Retail get their ass kicked all the time, right? And there was normally a cutoff for me to think about taking any long positions when we were roughly above the 73 mark. We're at 79% long overall. To be fair, Bitfinex is almost always long. I think we should just forget about this and just look at their BitMEX, which again is not even BitMEX anymore, and Binance. Maybe we could just look at Binance. 65% more long. So look, there is a chance that we can go up if we just focus on Binance's positions, which is, again, for the majority of the volume here is huge. So maybe it can go up before it gets wiped off. But retail are appearing to be quite significantly long. So retail often, that's where the money comes from, isn't it? The wealth transfer comes from retail into institution, I suppose. So it's just anecdotal. But when we're looking at a chart that is effectively in a downtrend in all time frames, there's nothing wrong with trying to catch a knife if your stop losses are tight, but geez, quite a lot of longs taking place in this downtrend. Whether they're significantly underwater, I don't know. We're going to look for a liquidation wick, perhaps, maybe. Something's not right with Bitcoin, let's face it. Something's not right at all. It's not trending. It's decoupled completely from all markets at the moment, which is what we like. If it were to only do it the other way around, that'd be perfect. But yeah, it's completely decoupled. But as far as gold, Dixie, stocks are concerned, more upside is way more likely than a pullback. Way more likely. However, the more we go up in the context of the general trends of all of these things, so we've got a general downtrend on gold, looking for a rejection around 19 or just above. We've got S&P, like I said, symmetrical triangle approaching the resistance, a little bit further to go before that resistance get tagged. Dixie, again, general massive, super massive uptrend, pulling back to 105.3. Yeah. So a little bit more continuation in their most recent trends, which again are opposing the larger trends, and then probably bounce on Dixie, pull back on gold, pull back on S&P. I know we're decoupled at the moment for Bitcoin, but if Bitcoin decides to recouple in the form of a downtrend, things will get pretty bad, to be fair. We've got CPI coming through today as well, so remember that, which is normally a bit of a mad thing to deal with, probably, I would imagine, slightly hotter than expected CPI. I'm just expecting that just based on what we've seen with oil trends. Oil is running high, and it's been running high for a couple of months now, so that should now start to filter through to CPI. But I still believe that that the Fed will not raise rates any further, and that's just my expectation. They're not going to do that. And so the CPI is just going to be right, we're suffering more inflation. Inflation's going up a little bit, but no big deal. It is what it is. It's to be expected. How markets respond to that is a different story. Either way, long story short, because there's a lot of rambling on this video, I think Bitcoin is going to continue down because the charts suggest that. And even though retail appear to be majority long, that normally just feeds through to the opposite direction of Bitcoin's price action. So if we're thinking if that's where we're going to go and we're going to head further down, where are we going to go and how far can we go before we get concerned? Well, we've still got a higher high, higher low structure. We can't really afford to come down too much more before that's completely wiped off. So we're talking 26,200 really, last worst case scenario. You can have wicks down lower than that. Again, we've got this major area down here that starts just below 26,000. It's also a Bollinger Band bottom on the daily. You could see a wick down to that level and maybe a bounce perhaps. But at this current moment in time, it does appear like it's a death cross retest, but below all major moving averages, and we should expect a wick down to 26,000 and see if we can at least get a reaction around there. Probably got the rest of the week, maybe in the beginning of next week, to do it, based on what we see with gold and stocks, which they still want to go up, and Dixie still wants to go down. But when gold and stocks reach those areas, we should get concerned about the future of all our positions if we're still positioned heavily in anything or wanting to long anything. The chances are we'll reach those areas on those charts, and then all markets will turn down again, and we'll have to see where we go from there. But right now, optimism in the form of Bitcoin that maybe it can start to recouple with the market, but based on its own individual merit, not particularly feeling it. If we really wanted to think about higher high, higher low structure, yeah, we've broken the trend line that exists here. Again, not bullish. It's still not a lower low though, so let's just face it, it's not the end of the world, not quite yet. 26,000, 26,200, losing those areas, we should start to consider new lows on this one, 24,000, and maybe back down to, into potentially seeing a bottom around 21,000-ish area. But that's a long way off at the moment. We can't expect that, not right at this moment, not today. But that's what it would mean, I would say, if we lose this short-term structure that we've been in since, September. But if I was to leave you with one last little piece of hopium, Bitcoin dominance did pull back. She did pull back, and it pulled back from a major area on a weekly. So this is gonna, if it does work out, it'll work out slowly. A rejection from here can take us down to starting off with 50% dominance, and if we lose that, then yeah, actually you'll probably be looking for a much deeper retracement, which might mean alt season. So look, there is still hopium on the table here, but as of this morning, yeah, that's all it is. It's hopium. It's hopium. Right, I'll leave it with you there. But thanks for watching. Hope you have a nice day. Take it easy.